Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody's had an amazing holiday weekend as we had a few days of relaxation and time to spend some quality time with the family. Remember what Memorial Day is all about. And so let's go ahead and do what we do each and every day, looking at our same 10 to 12 futures markets from an educational perspective. Now, last night we did have a live trade room, so there are going to be some levels on here from last night's session. As always, if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates. And if you're not new to the channel, do me a favor, share this with somebody else. Share the page, put it on your social media. I like to spread the word of the channel and what it is that we do in the DMC. All right, let's go ahead and dive in. So the S&P this morning, we are up 1.5%. 1.8%. With a really nice strong move up. So last night when we were looking at the markets, we were looking at this area here of potential demand as a place to get long. Now we have a box around the hourly level, but in reality we were looking at the 15-minute version of this level. The 15-minute version of this level, I gotta make sure I change the right color to signify that it's a 15-minute zone, is this picture right here. And so we have this circle here because this circle represents, where I was looking at it last night, which when we were doing the live trade room was about 8 p.m., 7 p.m. Central. We had this little bit of basing, and our point is that we can't have any basing inside this yellow area because that would be less than a 2-to-1 reward to risk. If there's any basing inside that area, that would take this from a limit entry to a confirmation entry. And so the market actually never came back and gave us that and actually rallied up pretty hard from that point overnight and has gone up ever since. And so continuing its rally higher, if I look at our 4-hour chart, we've come above these, I'll call these controlling pivots. And by coming up above those controlling pivots, it's allowed price to continue to move higher. And we don't really have any supply for a bit. So looking at the market, I think it makes more sense to continue to be long. Obviously, we want to get long on a pullback to a quality area of demand, but you may want to have to just take a breakout. But last night, the ES did not give us a quality breakout setup. Now, the market that did give us a quality breakout setup was the YM, and I don't normally look at the YM, but for those of you that were in the room last night, you should have been able to pick up about 200 points on this YM breakout, as this did give us a good setup, and we were looking at this area here for a potential upside move, as price did give us a good breakout to the upside and is continuing its run. If you took that trade, I think now's an opportunity to take a little bit of money off the table and maybe move your stop up to 24,871, just below this demand area here. That locks you in with about 100 points worth of profit. And by the way, it's never a bad thing to have your first winning trade of the week be, before the market opens for the week. This is why our live trade rooms are always, we typically do Sunday nights, except that on a holiday we're going to do a Monday night, but that's why we do them, because this little move right here is a really great way to start your week, right? You lock in about 100 points worth of profit. All right, looking at the NASDAQ, our NASDAQ level, very similar picture. Now in the NASDAQ, we did have a level up here of supply that we are approaching, and that supply level that we're approaching, if I look at it on the 4-hour, I'm just going to zoom way in over here, is this area right here. Now this is a 4-hour level of supply that we have rallied ourselves into. However, my problem with this supply level is we've already come close to it once and moved down from it. We're coming to it again, and now we're in it for the second time. And we've already traded halfway into the level. The other piece of that is that we're coming close to our all-time high. And I always make the joke, we're about to set in a new all-time high in the NASDAQ. And when one things that I talk about is you don't tug on Superman's cape, you don't spit into the wind, and you don't try to short the all-time high. I think we may get a little bit of a pullback off of this high down into this region here, but I don't know that it's going to be a huge pull. And we are at very extended positions. So I think it still makes sense to wait for pullbacks to quality areas of demand or get long on a breakout. That's why we have breakouts. We have come back a little bit in the overnight. And if we do come back deep enough to the open of yesterday's market, this was where we opened last night. We could get a drop back down into this region here. So keep an eye on this level here for a potential breakout or a potential retest. Now remember, that's still a Globex session, so just be aware of that as we retest that level. Next, crude oil. If we're looking at our crude oil trades, if you're trading the July contract, our July levels really hit our supply, and we got a really nice move away, and then we came down into here on our demand level and popped up there. So this has been a really nice move for those of you that are trading the July contract. You got a really strong move away. So I'm going to remove that level because we've traded it a couple of times. And I'm actually now going to take a look at a breakout long above here if we get some basing. Now, that's the July contract. I know many of you cannot trade the July contract, so we've been analyzing the September. So looking at the September, we get a very similar picture with a potential breakout long area above here. That's the level that we've been waiting on. I'm going to continue to leave that in there as our next opportunity for price to get long above that zone. Next, gold. In looking at gold, we are kind of chopping sideways a bit. And that sideways chop has really set it up nicely for those of you that trade options on futures. If you do not trade options on futures, definitely something worth looking into and learning, because there's been a lot of opportunity in options on futures in both gold and, frankly, crude oil is giving us that opportunity again here soon. But we do have a bit of a support line right here that I need to pay attention to. If we get basing in front of here, look for a bit of a breakdown. This has been a demand zone right here that we've hit a couple of times off of this little demand area right in there, and it's held. But I think if we get some basing in front, we may get a little move down to the 1705 area. Next, let's talk about bonds and currencies for a moment. Before we move into bonds and currencies, what I want to do is take a look at the dollar. And when I look at the dollar, we can see very clearly on our dollar, let's go to the daily here, we are very, very, very sideways. And so here's one of the things that I caution people against all the time is forcing trades. And if you find yourself getting chopped up looking at currency trades and bond trades because the dollar is going straight sideways, stop it. Stop fighting a very, very sideways market and maybe start to look into other opportunities for trade ideas. And I say that because as I look at this, I think, we look at some of these levels that they're just very difficult to trade in the small time frame. And we saw another example of that last night as we came up, as the dollar showed some weakness, and we came up through a lot of our small time frame levels. And so you're going to continue to see that as long as these markets go sideways. So in the bonds, we are sitting, between these areas of demand and supply. We've been very range bound in the bonds. Is there a way to trade it on the very small time frame? Sure, you're going to find opportunities on the very small time frame. Sliding down to like the 5-minute chart. But I don't know that I want to dive all the way down to the 5-minute chart or even the 15-minute chart. I might be able to find something in here, right off of this big candle from yesterday, but I feel like you might be forcing it just a bit. The Aussie. Last night we looked at a potential confirmation short, and the market did pop through that confirmation short. So it did give us finally the best setup we've seen for a long in a little bit, which would be a pullback right into this wick over wick area right here, which is where our European market open is. Now this level gave us no entry, so price popped right through that area, and no area for entry, but that would be our opportunity to get long. In the euro, we did look at a little 15-minute zone right in here, and it was this little area right there. The market did come up into that zone. Unfortunately, we came close and then didn't get in, and then came into it, and it gave us a confirmation entry and then popped right through for a quick stop out. So that was a very small level for those of you that took that one. Very small level of small trade with the reward relative to the risk. You take a small loss. But now it sets up for a potential pullback if we make it back into this European market open level right here. Now, this is a wick over wick area right there that on a smaller time period, if I go back to the 15 and we look right at that European market open, we do have a little bit of a level. Now, it's not a very clean zone if I look at this, right? Because we've got this long wick down right here. Price comes up here, these up wicks, and then this drop base, and then this pretty big move here. All that being said, I don't love that level. I like it in the Aussie much better, and so it should still turn in the Aussie if it hits that area. You might go candle to candle in this region, but I don't know that anything else makes sense. In the crude oil, or excuse me, the Canadian dollar, we had the Canadian dollar, a little bit of basing. We were looking at this area up here as a potential area for a candle to candle short if you got a decent setup. We didn't get a really good reversal candle up here. We did get a bit of a doji, but not a great time of the day for that to get there. That's not a great reversal candlestick, and we've rallied up from that point. So looking at this, I would say that in the Canadian dollar, we would look to this region here for our next reversal. Moving over to the Great British Pound and Japanese Yen. In the pound, we are really rallying higher. This is actually the market that we've moved the fastest in, as it had a lot of strength in the overnight. The pound has come off of, we're coming close to a supply level up in here. Now, this supply level was formed right around market open. I think if we get basing in front of that level, it's going to turn it into some weakness. And so if we get a bit of a pullback, we're going to look to this wick over wick right here, right at the London Open as our pullback level. We've actually got two wick over wick levels, and neither one of them touch each other. And so in that case, it's usually better to do a confirmation entry on the first level and a limit entry on the lower level. And then Japanese yen, our Japanese yen level, we did have a setup here for a potential breakdown. And funny enough, we got no basing inside of that level. Didn't get any real quality basing inside of that zone to allow us to have an entrance for that position. And we've kind of moved up off of that low. Now set up a little bit of a double bottom. Looking at our 4-hour, we're very sideways in this one, so I'm not going to add anything new to this one. I'm going to allow this one just to continue to make its move. So if you guys have any questions, as always, send us an email, support@tradersarmy.com. I appreciate you joining us this morning, and I will talk to you soon. See ya.